There are many mixed opinions about what's going to happen in 2023. Many people are expecting a recession. Some people expect a soft landing. Some people are expecting a financial crisis worse than 2008. And there's many different and very mixed opinion about what's going to happen in 2023. And many investors in the stock market are relying on indicators like whenever the Fed pivots, this is when we crash the most and this is when you buy stocks. Or some people say we bottom whenever the VIX hits 40, or whenever the P/E ratio goes to 15, or we're going to have a financial crisis because the Fed is hiking rates so fast, one of the fastest rate hikes in the 21st century, maybe the fastest rate hike ever. And there's a lot of different opinion about all those things and a lot of indicators that retail investors are looking to use for them to try to time buying in the stock market. But I personally believe that 2023 will be the year of surprises, where we all get surprised one way or the other, either where things are much better than all of us expected, or when things are much worse than even investors are already expecting. And the main reason I am saying that is because this recession, and if you look at this chart, the probability of a recession over the next 12 months, this is the most anticipated recession in history. 2008 doesn't come even close. 99 doesn't come even close. So everyone is expecting a recession, and you hear it on the news media. All of your friends are expecting a recession. All the YouTubers are expecting the recession. All the businesses are expecting a recession, firing employees, trying to prepare for a recession. So it's highly anticipated. And whenever you have something that's consensus, meaning a lot of people are expecting it, either normally it doesn't happen, or it happens at a much worse scale than people are even expecting. And there's many ways where I believe 2023 could be different than other market crashes we had before, where the indicators that many investors are trying to look for might actually not work in 2023. There's no certainty. I'm not saying, it's not going to happen or they're not going to work or whatever, but I'm trying to give some arguments which say that no one can really know for certain when is the time to buy stocks, or when we hit a bottom on the S&P, or what's going to happen in 2023. As many of those indicators, I believe, are pointing out to the wrong direction that many investors are looking at. Now, if you look at this chart, which now it got very popular, and I hate that it got so popular, because a couple of months ago, many big YouTubers, especially Meet Kevin, which I watched his video, he was saying that we bottom on the Fed pivot. And then I came up with my video and I said, this is completely wrong. And I showed a chart on TradingView, which is saying that we crash after the Fed pivot. As the Fed is cutting rates, we start going down on the S&P 500. And then he corrected his mistake, and other YouTubers are talking about the same thing. And this chart got way too popular on Twitter, which now the consensus view is that we bottom after a Fed pivot. Therefore, we should not be buying any stocks right now, because it's 100% certain we're going to bottom after the Fed pivot. Why? Because we did that in every single market crash. Well, this is where the difference actually comes in. And you have to be open-minded to actually look at that stuff. Now, what happened before, if you look here down in the blue line, this is the Fed funds rate. Whenever the Fed funds rates peaked and it's going down, this is when we started going down in a major way on the S&P 500. The same thing happened the second time. It peaked, we're going down, we went down on the S&P 500. Same thing happened here, we went down, the S&P 500 crashed. But what's happening this time? The Fed is hiking rates like never before, and we are crashing on the S&P 500. ARK went down 80-90%. All of this is happening before the Fed pivot. All right. Now, why is it different this time? Why are we crashing before the Fed pivot, not after the Fed pivot? And Jerome Powell talked about this, is now the market is more efficient in pricing in certain stuff. For example, all the Fed had to do when in the start of 2022, say we're going to start the hiking cycle, ARK crashed, all the growth stocks started crashing, the bond market has its worst year in history, mortgage rates went to 8.5% from 2.5% to 3%, and all hell break loose course, and the Fed didn't even get to 3.5–4% on the Fed funds rates, and all those things have already happened. Now, why did this happen? Why? Because the market is pricing it in before it actually happens. And this is why this time could be a little bit different from other times where maybe the market has already priced in those 5.5% type of rate hikes, and maybe whenever the Fed pivot, we could even rally on the S&P 500 instead of continue crashing down. Now, I'm not saying this is actually going to happen, but this could be a very high possibility where most retail investors actually get surprised as they were sitting 100% cash waiting to buy after the Fed pivot, and then whenever the Fed pivot, we actually go up instead of going down because we already started crashing before the Fed pivoted. So this is one of the ways that I believe a lot of people could actually get surprised, as everyone is expecting the market to crash after the Fed pivot. All right. Now, this is something else that we could talk about. And again, I'm not going into one side of the story. I'm analyzing both stories and why I believe, no one's going to know for certain what's going to happen. Now, the other argument is, which I personally myself talked about this, and this is the fastest pace of rate hikes in history. If you look from 2017 to 2019, it took them 3 years to raise the fund rates to 2.5%. Now we're going to get to 5% or 4.5% interest rates in only 12 months, not even 3 years. So this is a very, very fast pace of rate hikes. Now, many people are expecting a financial crisis to happen in 2023 because those rate hikes have some type of a lag. But as again, we talked about this, and Powell talked about this himself, that now the market is pricing those in before they actually get to there. So there's not as many lags as there used to be before. But again, the Fed is hiking rates in a very, very fast way, but nothing major is really breaking. And many people are surprised, why is nothing breaking? How come the Fed keeps hiking rates and nothing is breaking? Well, yes, because we had the fastest pace of rate hikes in history. We also had, the fastest increase in liquidity in history. This is the Fed's balance sheet. It went from 4 trillion all the way up to 7 trillion, and it kept going up to around $9 trillion. This is a pretty massive expansion of liquidity. And yes, the Fed is taking liquidity out by doing QT in their balance sheet, but you could see the massive difference of their balance sheet from 2020 to 2022. This is much more money and much more creation in the system from the Fed's balance sheet, which is why I believe nothing is really breaking, as the Fed really need to take out a lot of liquidity before we start having a lot of liquidity issues. So this is another big surprise where retail investors could really get surprised, where we might not have a financial crisis, or maybe nothing bad actually happens. But again, if nothing bad happens, then the Fed is going to keep rates around 4.5–5%. And this is bad for stocks anyway. Now, what I'm personally doing and what I'm looking for me to look for some type of a bottom in the stock market, which is not a consensus view yet. Everyone is looking for the Fed pivot. Everyone is looking for, things like something breaking because the Fed fund rate is going up. Everyone is expecting a recession. But what I'm personally waiting on, I'm not waiting on the Fed pivot. What I'm waiting on is earnings revision. And this is not consensus yet, as earnings are still expected to grow around 5% in a global recession of 2023. And I talked many times about this, and I think it's absolutely ridiculous. Whenever those earnings expectations actually come down to around 200 EPS, at least down 10 to 20%, so around 195 to around 200 of EPS, that would tell me that we are somewhere close to a bottom. And this is the only thing that I believe is going to work in terms of a good indicator for us to know where we are, in the cycle, or where we are in the stock market crash, which again, why I believe most investors should not try to time the market to be 100% cash and buy whenever the Fed pivot or buy whenever this happened. Why? Because it worked in the crashes before, while this crash could be very, very different from what we had every single time. Now, this is my video for today. I hope you enjoyed it. If you did, please press the like button and maybe consider subscribing. So I hope to see you in another video.